We are pleased that you are joining WSP for this one-hour webinar on conflict minerals, All is Not Lost for 2013 reporting. Just a few housekeeping tips before we get started. The presentation will last approximately 45 minutes with a Q&A to follow. Because the audio has been disabled, please ask your questions by submitting them in the questions box. If we are not able to get to all of your questions, we will make sure to write them down and submit answers, and we'll get copies emailed to everybody that is attending today. We will also be sending out copies of the slide deck to you no later than Thursday by close of business. Our presenters today include Tor Dennis, Product and Supply Chain Practice Leader. He has over 25 years of technical and marketing experience for multinational entities in North America with projects related to product development, supply chain management, business collaboration, governance, risk management, and compliance, as well as process analysis, re-engineering, improvement, and documentation. He will be joined by Revati Pardon Tasmalka, a senior consultant with WSP who specializes in sustainability and product stewardship programs. This includes supply chain data collection. She also works extensively in the area of global product environmental regulation, such as ROHS and REACH, and supports conflict mineral programs on company policy, due diligence processes, and RCOI, including supplier data collection. And now I will go ahead and hand it over to Tord, who will begin the presentation.
Thank you, Susie. So just a quick review of the agenda. Today we're going to talk about the Dodd-Frank Act and the Securities and Exchange Commission, the SEC's final rule regarding conflict minerals. We will review the WSP survey that was taken when you registered for the webinar. We're going to go over the conflict minerals compliance process and a sample customer case study. And we'll talk about what companies should be doing today and how you should be doing it, and then summarize at the end of the presentation. So who is WSP? We are a $1.7 billion consulting company. We have over 15,000 employees worldwide. And we help clients plan, design, engineer, and manage buildings, transport, infrastructure, industrial, environmental, and energy projects around the world. As Susie stated before, I'm the practice leader for the Sustainable Product and Supply Chain Practice here with WSP's Environmental Group. One of our many services is to be trusted advisors on conflict minerals requirements, providing pragmatic business strategies for product compliance and supply chain management. We support end-to-end conflict minerals process, including strategy development, country of origin inquiries, risk assessment, due diligence, and SEC filings. Our strong industry background in material sciences and supply chain engagement helps us to collect and interpret complex data. We are due diligence experts on all phases of product compliance and supply chain management. And we have a proven track record supporting clients' needs for conflict minerals compliance, along with other environmental regulations such as REACH and ROHS. So just a quick overview of Section 1502 of the Dodd-Frank Act and the SEC's final rule. The Dodd-Frank Wall Street Reform Consumer Protection Act was passed in July 2010 as a response to the Wall Street crisis and to enact consumer protection reforms. The SEC published the final conflict minerals rule in August 2012, and compliance is required for the calendar year beginning January 1st to December 31st, 2013. That is, it covers products that were manufactured or added to your inventory between January 1st and December 31st of 2013. We'll talk more on that later. The conflict minerals covered in this act are tin, tantalum, tungsten, and gold, and their derivatives. And this is commonly referred to as 3TG. They typically refer to the ores, such as columbite tantalite or coltan, which is an ore of tantalum, and all of the derivatives that can be derived from the ores. Keep in mind that to the SEC, these are all conflict minerals regardless of where they come from. Gold is a conflict mineral. So are the other 3 Ts. In response to the SEC's rule, companies that are directly affected must conduct a reasonable country of origin inquiry, RCOI, to determine if they have any conflict minerals in their products, and if those conflict minerals originated from the Democratic Republic of the Congo or a covered country. This means you must understand the metals in your products that come from the suppliers, and your suppliers must understand who processed the raw ores, the smelters, to create those metals. The first specialized disclosure reports on Form SD, and if required, an accompanying conflict minerals report, or CMR, are due by May 31st, 2014. Companies who have conflict minerals in their products and have conducted an RCOI may also have to get an independent audit of their due diligence process. So let's pause for a second and take a look at the survey that you filled in when you registered for this webinar. From our responses of the attendees, about 38% say they are 25% complete with their supplier responses. 17% say they have 50% response from their suppliers. 21% say they have 75% from their suppliers. And 24% of you say you've gotten 100% response from your suppliers. 35% of you say you have to publicly disclose of the conflict minerals in your products. 52% say no, you don't have to do that, and 13% of you don't know. 48% of you say you don't need to contact your suppliers. 31% of you began before June 2013. 10% of you began in the second half of 2013. 7% began after January 2014, and about 4% of you haven't started. And then 66% have responded that you have had a conflict minerals inquiry from your customers, compared to 34% who have said you haven't had any inquiry from your customers. So it looks like most everybody is interested in conflict minerals and have begun looking into the process or actively are engaged in the process. This flow chart was reproduced from the SEC's final rule, and this is posted to the Federal Register's website. It outlines 3 steps, concluding with the filing of the Form SD and a conflict minerals report if it's applicable to you. We encourage you to download and read the rule yourself, but let's take some time and walk through the steps at a high level. The first step is to determine if you're affected by the rule. If not, then there's nothing else you need to do, but you do need to keep in mind that you may be indirectly affected if you are a supplier to a company who has to file. The rule only applies to companies that report to the SEC under Section 13A or 15D of the Exchange Act. Primarily, publicly traded companies and foreign private issuers are affected. This is estimated to be around 6,000 SEC filers who will be directly affected. However, if you don't report to the SEC, but your customer who uses your product does, then they will be coming to you to understand if there are any conflict minerals in your products and where they were sourced from. The estimate is about 25,000 companies will be indirectly affected in this way. The rule only applies if conflict minerals are necessary to the functionality or production of the product. That means conflict minerals must be present in the product or the component, and it must be intentionally added and not a background concentration. There is no de minimis exclusion for conflict minerals, and the rule only applies if the product is manufactured or contracted to be manufactured by the company. The focus is on whether you have actual influence over the manufacture of the product. Therefore, branders of third-party products are potentially excluded, and retailers and those who purely buy and sell products are excluded. For the current reporting requirement, products must have been manufactured or added to your inventory between January 1st and January 31st of 2013. So for step 2, once you've determined that the conflict mineral law applies to you or you have some role in reporting conflict minerals, you must now go through your products looking for 3TG minerals and its derivatives. For many companies, this will be the most difficult step because so much of a product is sourced from third-party suppliers and distributors. But once you get this info, the next step is to determine whether the conflict minerals originate from the DRC or covered countries. This is the reasonable country of origin inquiry, or RCOI step. And this will largely depend on the size of your company, the number of products you produce, and the extent of your supply chain. But the rule does offer some guidance. Representations directly from a facility at which conflict minerals were processed or indirectly through immediate suppliers, if reasonably reliable, are okay. Conflict-free designations from recognized industry group audit programs are also okay. The SEC recognizes that it will be near impossible to determine the country of origin for materials acquired as scrap and recycle. And the inquiry does not need to cover all of your suppliers. This means you can make a reasonable determination of which suppliers you expect to have 3TG minerals based on the products they make, and then you can contact only those suppliers. To help make this step easier, a number of companies have bonded together to create entities such as the Conflict-Free Sourcing Initiative. This is an effort by over 150 companies from several different industries to develop tools, policies, and standards that everyone can utilize. This has resulted in an electronic form commonly known as the EICC JESI template, which can be filled out by companies at all levels in the supply chain to declare the presence of conflict minerals and their sources. We'll talk more about this in a later slide. So for step 3, for those who are required to report to the SEC, the goal of the due diligence step is to determine the source and chain of custody of conflict minerals used in products. Every company must have a due diligence process, and every company's due diligence process must conform to a nationally or internationally recognized framework, such as the one created by the Organization for Economic Cooperation and Development, OECD. The SEC recognizes that each company's due diligence process will reflect the company's unique circumstances and business practices. No two will be the same. An independent private sector audit, or IPSA, is a critical component of due diligence for companies required to conduct it. Based on the outcome of your due diligence, the IPSA may be required. The IPSA is required to be performed in accordance with the Yellow Book and can consist of either an examination, attestation engagement, or performance audit. So now that you've determined that you have 3TG or conflict minerals in your supply chain, You must file a Form SD and describe your RCOI and the results of your inquiry. This form can be downloaded from the SEC's website, and we have provided all of those links and many more at the end of this presentation. If you have determined that you have conflict minerals from the covered countries, but you cannot determine if they financed or benefited armed groups, then you must also file a conflict mineral report, a CMR. If you have determined that you have conflict minerals from the covered countries, and they came from scrap or recycle, then you do not have to file a CMR. If it was determined that the conflict minerals financed or benefited armed groups, which is the focus of this rule, then the CMR must also include an independent private sector audit, IPSA, which expresses an opinion or conclusion as to whether the design of the issuer's due diligence measures is in conformity with the criteria set forth in the due diligence framework, and whether the description of the issuer's due diligence measures is consistent with the process undertaken by the issuer. All of this is detailed in the SEC's final rule posted to the Federal Register website. So I've gone through a high-level overview of the conflict minerals rule, and there's a lot to process there. There's a 2014 March 31st filing deadline for January 1st to December 31st, 2013. If you haven't started at this point, all's not lost. Depending on where you are in your process, there are still things that you can do to meet the filing deadline on May 31st. For the first 2 years, the SEC allows companies to say, we don't know if we have conflict minerals, but you must show them that you are searching, and you must give a detailed report for 2015, for the 2015 reporting period. In order to do this, you should start off by dedicating a project manager. We've seen many companies' best intentions fall flat because they don't have one person who's assigned to this task. We've also found that everyone thinks that everyone else in the company is doing it. The engineering department thinks that the supply chain group is doing it. The compliance team thinks that the finance department is doing it because this is a rule from the SEC. The reality is that if you don't sit down as a team and decide on the roles and responsibilities for compliance and align internally, nothing will happen. Once you get your house in order, we recommend you develop a written due diligence plan and a roadmap covering RCOI, due diligence implementation, and reporting. You must document in your due diligence plan what is reasonable for your company and your supply chain. Remember, this is going to be different from company to company. You need to focus the scope of your RCOI. Start off by using the EICC JESI template version 2.03. This is the most common form. Most companies are using it. It's likely that your suppliers have already filled out one for another customer. You can download this template from the internet from the conflictfreesourcing.org website, email it to your suppliers to fill out, and have them return it to you by email. Initiate the RCOI with your Tier 1 suppliers. Give them the responsibility to contact the Tier 2s and below. Focus on company-level reporting. The EICC JESI template enables you to request data at a division, product category, and product level. But at this late date, if you're just starting, that's not feasible. Focus on suppliers with parts most likely to contain 3TG. Speak to your engineers. They can tell you that some parts are very unlikely to have tin, tantalum, tungsten, and gold or their derivatives. So why spend valuable time on those suppliers right now. Set a clear drop-dead deadline for responses that gives suppliers enough time to respond and gives you enough time to review the responses and to create your report to file with the SEC. And remember that DRC conflict undeterminable is a valid response for the calendar year 2013, which you'll be filing on May 31st, 2014. The transition period is 2 years for large companies and 4 years for small companies. But you must decide quickly how you want to proceed for the 2013 reporting period. Also remember, you do not need to be conflict-free. You don't. One goal of this exercise is to report if you have conflict minerals or not. Many companies will find they have conflict minerals. Tin is a crucial element for most lead-free solder. So many electronics and high-tech companies will always have a conflict mineral in their product line. And if the conflict mineral originated from an uncertified mine in the conflict region, then there's no penalty other than public opinion. So if you do have a conflict mineral from the conflict region, there are no fines other than public opinion. You must conduct the due diligence and retain an independent auditor if needed. Report to the SEC, filing the Form SD and the conflict minerals report, including the audit as required. And again, you must post the required information on the company website. Once you start getting responses from your suppliers, you need to check them for completeness. So if you start by sending the EICC GESI template, you will have to go through these forms, start taking a look through them to see how complete the suppliers have been. You may need to reconnect with some suppliers because they didn't fill in everything. A nice feature of the EICC GESI template is a macro that clearly shows you in red and green what's complete and what's not complete. If the forms are complete, then you need to analyze them for the presence of conflict minerals and disclosure of the corresponding smelter. Another nice feature of version 2.03a template is that it lists the recognized smelters. Each has been identified with a unique smelter ID that was assigned by the EICC. But your supplier also has the capability to add a smelter that is not on the list. In either case, you still need to determine if the smelter is conflict-free or not. And herein lies another difficulty. There is a list of conflict-free smelters maintained by conflict-free-sourcing.org, and you can cross-reference what your suppliers give you with this list. But you must remember that not all mines in covered countries are conflict mines. There are legitimate mines in the covered countries. This is why the industry lists, such as the one maintained by conflict-free-sourcing.org, are crucial. And again, you must remember that you will have conflict minerals. You will never be conflict-free. So don't be surprised when you have conflict minerals. Don't underestimate the length and depth of your supply chain. This is a crucial step that most people takes most people by surprise. Even companies that started 2 years ago are still finding that they have multi-tiered supply chains with people dispersed in regions that were very unlikely, or at least they didn't think of. Don't underestimate the accuracy of your supply chain information. Some suppliers are 2 to 5 people who buy from distributors. Information changes, people move, people quit, people change to different jobs or different departments, emails change, phone numbers change. Most of these smaller companies lack the resources to report this information to you on a timely basis. And if they can't report their own information, then imagine how well they can trace metals back to the smelters. They will need your assistance. This is why we're advocating being able to tier your suppliers and making a decision as to how far and how deep you will go. The longest part of the RCOI process is waiting for your suppliers to respond. And they might be waiting for other suppliers to respond. You can't control this. So you're going to have to set a date, set a cutoff period, and decide what you're going to do with the information you have received at a particular date. Distributors can be a dead end. They source from many places, usually from the cheapest sources. And they typically don't collect material information, let alone country of origin information. Don't rely on software, at least not up front. Without a strong process in place, you will be putting garbage into software and getting garbage out no matter how much you spend on the software. You will eventually want software, but at a minimum, you should get a database, something that can help you sort, compare, and map this data, especially as it evolves from year to year. And this information is going to be cumulative. It's not going away. So you want to retain this information, and you are required to retain this information by law. Leverage industry knowledge. There are a lot of folks out there who have already been doing this, and you can learn from them. And once again, you have to determine if you are DRC conflict-free or not. But remember that DRC conflict undeterminable is a valid response for calendar year 2013. So here's a quick case study from one of our many customers who we work with for conflict minerals. We've had several customers who've had a late start. This particular customer came to us this year. We began conflict minerals data collection for them in January. We went through their list of suppliers, and after a lot of discussion with them, we decided to limit it to the active, directly controlled suppliers, all of their T1s. That's what we were focusing on. In phase one of the project, we decided to contact their 300 suppliers. We sent them a letter explaining who we are and the process for collecting the information using the EICC JESI template. We also requested that the suppliers give us company-level declarations. So we're not asking them which products have conflict minerals. We're asking, out of all your products, do any of them have conflict minerals? We also, working with our customers, have prepared several live webinars that train suppliers how to fill out the EICC JESI template. And so we invited this customer's suppliers to sit in on one of our many webinars. Because of the tight schedule, we have an internal tool that we use to manage the process. Our Process Compliance Manager tool, PCM, was developed based on our extensive experience with environmental and regulatory management services. So from all of our years of doing REACH and RoHS or WAS compliance, we've developed an internal tool which we received a 2013 EBJ Business Achievement Award for last month. So as we receive these supplier disclosures, we review them in PCM for completeness based on a set of response criteria that we have developed. If the disclosure does not pass the criteria, we contact the supplier to resubmit the form with our guidance. So we talk to them, we help them, we show them what's incomplete, and we ask them to resubmit this. Our customer set a deadline for March 31st to consolidate all the conflict minerals data collection for SEC filing purposes. So on March 31st, we're still continuing to capture or collect data from suppliers, but everything up to May 31st is what we're processing. Anything after May 31st, we will still continue to collect them because we still need to analyze this for phase 2 for 2015 reporting. So at the end of at the deadline, we were up to 95% of the supplier responses, which is very good given the time that we had to work with this. Based on the RCOI conducted since March 31st, there are a large number of unknown smelters in this customer supply chain. We don't have enough time to go through and investigate all of these smelters by the May 31st filing deadline. However, all the EICC GESI recognized smelters that their suppliers have reported are from covered countries and have been validated as conflict-free, so we got a win there. So at this point, we're helping the customer to prepare their conflict mineral standard operating procedure. We're describing their due diligence steps. We are helping them to fill out the Form SD and CMR with help from their accounting and finance consultants. And this customer in particular will be filing as DRC conflict undeterminable for 2013. There's no trigger for an IPSA. Once the May 31st filing is done, we anticipate starting phase 2 of the project. As we continue to collect the disclosures, we will start analyzing them for risk. For example, we will work with the customer to determine which supplier parts should have conflict minerals, and if those suppliers are correctly disclosing the presence of conflict minerals. We will continue to investigate unknown smelters, try to discover where they are, and work with the EICC to get them registered as a recognized smelters. Once you've made it past May 31st, it's time to do it all over again. Step 1 is to review lessons learned. What did you do well? What can you do better? Leverage industry knowledge. This is where someone like WSP can be invaluable. We have the technical expertise, we have the manpower to contact your supply chain. Now is a good time to evaluate commercially available software tools that can help you automate the process. But remember, a poor process will only get worse when you automate it, so you have to develop your process. Learn more about the IPC 1755 industry standard. This is an XML format that enables software tools to efficiently exchange conflict minerals information. The EICC GESI template is evolving, and it will support the IPC 1755 standard. The EICC GESI template, think of that as the front end where the suppliers enter their information, and the IPC 1755 is the back end, the XML that your software tools will read. Communicate your conflict minerals policy to your suppliers. Make it part of your purchase order process. Make a clear statement to your suppliers of what you will do if they don't comply in a timely manner. Embed conflict minerals compliance into your day-to-day management process and systems. But above all, come to terms with conflict minerals. Remember, for most companies, you will not be conflict-free because metals like tin and gold are designated as conflict minerals. So this is just a quick flow chart that shows you what the process is. These are things that we have gone through. You need to prepare for a conflict minerals process. You need to do an RCOI, conduct your due diligence on the supplier information, prepare your report, and repeat this year after year. The first required disclosures are May 31st of 2014, and I think everyone on this call today already knows this. So in summary, on May 31st, you must determine if the rule applies to you and what your action is going to be. The issue is not going away. The European Union has recently proposed their own conflict minerals guidelines, and the market has demands for information. Stakeholders, customers, all want to know about your use of conflict minerals. Our advice is to stay the course. Prepare to meet conflict mineral disclosure requirements. You have to report on what you have. Having conflict minerals is not a bad thing, and I've said it over and over again. Tin is used for lead-free solder. For those people using in the high-tech industry, you will practically always have a conflict mineral. DRC conflict undeterminable is a valid response for the 2013 reporting season. The SEC wants you to file, and they want to see your due diligence plan. They also require record retention for 7 years. So this gives you time to prepare and improve your due diligence plan. Add clear conflict minerals clauses to your supplier's term and conditions. We have more information on our website at www.wspgroup.com/USA. Please visit us for white papers and fact sheets. We will be starting a webinar series this summer entitled Conflict Minerals, The Road to 2016, where we will give more valuable information on the post-May 31st, 2014, what should you be doing to address the reporting period for 2016. At this point, I'll turn things back over to you, Susie, and say thank you to everyone for attending.
Thank you so much, Tord. It looks like we do have a few questions that came in. The first one is, are banks and financial institutions subject to the conflict minerals rule?
That is a very good question. And the answer to this question is it depends. Once again, the question behind this is that the focus is on whether the entity actually has influence over the manufacture of the product. So one item that comes to mind about a bank or a financial institution is credit cards. And so typically the answer would be no. Credit cards are pretty generic and the design is fairly standard. But if the bank gives the manufacturer of the credit card or any other thing that is being manufactured by use of the financial institute specific guidelines that require use of specific materials, then the answer is yes. If you think the conflict minerals rules apply to you, you should contact your legal counsel to help you make this final determination.
Okay, wonderful. Thank you, Tord. Another question that came in is regarding the smelter. The question is, how do you determine if a smelter is conflict-free or not?
Yeah, this is a question that plagues everyone, and especially at this moment where the reporting period is quickly coming up. Some companies have taken on the task of sending representatives out to mines to do inspections, basically putting boots on the ground. In order to do that, you first need to collect this data from your suppliers. So your suppliers need to tell you what minerals and metals are in their products and where they originated, and then you can decide on if you want to determine if the smelter is conflict-free or not, or how you're going to do this. this task can be very resource intensive. One way of doing this is to, again, send people to visit the smelters and to visit the mines. But one observation that has come to light is that for some ores, for example, tungsten, there are a reasonable number of smelters out there. So the emphasis has switched to getting those smelters to source only from conflict-free mines. This is where groups like the EICC, JESI have a lot of influence and have a lot of advantages, because what they have done is they have put together a program to have smelters voluntarily certify that they are conflict-free. And so they have a whole process outlined on their website where smelters can self-register and follow a process to undergo an audit. The idea here is that if a smelter voluntarily signs up to become conflict-free, and they are certified to be conflict-free, then manufacturers would prefer to source from them rather than smelters whose source of minerals is unknown. So that's probably the first step is visit the EICC JESI website, the conflictfreesmelting.org website. They have an approved list, it's publicly available, and they're continuously undergoing smelter certification and audits. Encourage your smelters or your suppliers to encourage their smelters to participate in this program.
Okay, wonderful. Thank you. We do have two more questions. Let me get to the first one, which is a two-part question. What is the difference between the EICC JESI template and the IPC 1755 format, and are they competing formats?
Oh, okay. So as I was trying to describe before, the EICC template is a spreadsheet that you can send to your suppliers. So it's something that's human readable, and what's nice about it is that it has drop-down menus in some places. It has a list of smelters of EICC JESI recognized smelters, and it has macros built into it that helps you to fill out the forms and to determine if the form is missing any information or if it's incomplete. So it shows you in red or green if there are any missing information. The IPC 1755 format is a machine-readable XML document that can be used by software tools to exchange information. So think of the IPC 1755 format as the HTML code that a website sends to your computer. The EICC JESI template is then the Firefox or Google Chrome or Safari or whatever your favorite web browser is that interprets this code and displays it for you to understand. They are not competing formats. It's expected that the EICC JESI spreadsheet will export information as IPC 1755 over the course of this year, which can then be read by software program and analyzed for different purposes.
Okay, great. And then this one actually goes also back to the smelters. The question is there a list of smelters that are known to be using 3TG from conflict sources?
Not that I know of. There may be a list out there. The most prominent lists that are out there are the lists that show conflict-free smelters. But there are many other entities that are cropping up, and over the course of our work, we will be posting more useful links such as this to our website. So I encourage everyone to visit our website, and you'll be able to find more information like that at www.wspgroup.com/USA.
Okay, wonderful. Well, I do want to thank our presenters today, Tord and Brevity, for this informative presentation, and also our audience for participating and joining the WSP Conflict Minerals All Is Not Lost for 2013 reporting. Remember, you can also connect with us on Twitter at WSP_USA, and also find us on LinkedIn under WSP USA. We'll make sure that we also post any relevant information links as well onto these areas. So if you do follow us, you can keep on up with us with those. And once again, we will be sending the slide deck to you shortly. And just want to say thank you again and have a wonderful day.